Good morning, guys. Welcome to this segment of my YouTube channel, the Trade Trends, where I come to analyze the market for what it is. So today, let's start off with the USD yen. Let's go over to the monthly time, to the weekly time frame. So let's go over to the monthly time frame and start from there. So this is the chart on the monthly time frame. You can see that it breaks above the the resistance level. So here, let's use our Fibonacci from swing low to swing high. You can see like there is a Fibonacci play here that is yet to come. It is it is complete, but it is yet to fulfill the extension level there. So that is another thing is that we break above the resistance level. That is like you are still in an uptrend. So let's go over to the weekly time frame. So this is it. There is something called a a a Fibonacci inside the Fibonacci level. So that's what just happened now. So inside that big Fibonacci level, there's another Fibonacci level there. Inside this big Fibonacci level, there's another Fibonacci there. Sorry. So inside this big Fibonacci level, there's another there. So and there is also a demand level right about here now. So there is a demand level. So let's scale down to the daily time frame. You can see the daily time frame that the market come back to it. It gives a pin bar pattern, a pin bar pattern. So I'm still here to enter this trade now. I'm still here to I'm looking for another opportunities on the lower time frame so I can enter the trade with smaller stop loss to catch bigger moves. But you can see there's a demand level there, the demand level where I mark out. So I just use a line, a thin line to signify it. You can see that this has hold a lot of time, a lot of time before. If you should see, tested there before. The market reverse, so it's a strong demand level. So let's go over to the 4 hours time frame to see how we can profit off this trade. So what we just have to do is that there's also a demand level here. So we are going to wait for the market to give us a pattern or to come back to this demand level here. So we just have to be patient, guys, because we still have a lot of opportunities to the upside if we should look at it. We still have about, let me check, let me use. So if one should enter here, oh sorry, if one should enter here, our stop loss is going to be above here. That's about 2.31 risk to reward. That is, if you should use 2%, you are making like about 5% of your capital, which is so amazing. But this is about 275 pips. That's a lot. That's really a lot. So all we just have to do is just to calm down and wait for the market to come back here to form it like a double bottom. You guys know that a double bottom is a reversal pattern. So and if a market trend is going to change, it will at least give a reversal pattern, whether it is head and shoulder or a double top or a double bottom. So in this case, we are going upward. So we'll be looking for is either an inverse head and shoulder or a double bottom. But it is likely it doesn't give us head, but it is likely for the market to form a double bottom. We just have to, because there's also a demand level. It's more like it is a demand level inside a demand level. You get me, guys? So that's it. So we just have to wait. There's no need to rush. We still have a lot of opportunities to the upside. Even if we should take out the 100% retracement, we still have the extension level. So, like, we still have a lot of opportunities to the upside. So there's no need to rush, guys. So that's it on USD yen. So last week we did some couple of analysis on AUD USD and NCG USD. So you guys can go over and look it. So we'll be reviewing the trade and the outcome of the trade next week on our trade ten, trade trends episode 3. So today we'll be going over GPB USD, and that will be the two pair. You guys know I only analyze two pairs daily. So that will be the two pairs I'll be analyzing today. So let's go over to the monthly time frame. So you can see the monthly time frame. The monthly time frame is pointing down. The monthly time frame is pointing down. So let's analyze it. We came down here, we touched this resistance level. It couldn't break above it. We touched this support level too. So it's in a range. So when the market broke out, it came back for a retest. And if we should use our Fibonacci level, you guys know I love to use this Fibonacci tool a lot. You guys know I like to use it a lot because there is really a thing about this sequence, this Fibonacci sequence. It doesn't only work for forex, but it's work for about life generally. It is very powerful. So you can see that this is the Fibonacci level that the market came to test back on, and that's on the monthly time frame, guys. So it has shows us that this market is pointing down. All we just have to do is we have to go back to the weekly time frame and see what's going on the weekly time frame. So on the weekly time frame, I am seeing something a double like a double top, a partial double top, because you can see the market came here, form a base, came back up here, and to form but it forms a lower high. It is not as high as the previous high, so the lower high. We are still in a downtrend, guys. So that's it. That's what we just have to do on the weekly time frame. So let's go over to the daily time frame. The daily time frame is where we check the immediate trend of all the overall trend. So let's see what's cooking on the daily time frame. So on the daily time frame, you can see a double bottom. And guys, before we be going for the big Fibonacci play, you have to break out this support level right about now. But before anything, that should if the market is not ready to move yet, it will at least come to test this support level here. So our target now will be this support level here, this 1.2200 level. So and you can see the market from a double top on the daily time frame. It has broken through the double top level. It came back to retest on it. You can see that even during the NFP on Friday, the market manipulated it. It still came back down. So that one thing about market manipulation is that no matter the news, or no matter what the market does during the news, the market is still going to respect its price action. You see, it's go up there, it still have to come back down. So let's use you guys. I can't do without this Fibonacci. So let's use our Fibonacci level. Let's check from swing high to swing low. You can see the market went to test the Fibonacci 0.5 level with the manipulation. So like guys, the market manipulation just hit the market in its direction. So whenever you see any moves when there is news, you should know that, and it is going opposite your direction, or it is, you should know that the market is just going to fulfill some technical levels. So that's it on the daily time frame. You can see we still have, what we just have to do is, everything is pointing down. The monthly is pointing down, the weekly is pointing down, the daily is pointing down. What we just have to do is to find a way to get into the market so you can profit off of it. Then we will sell to this 1.2200. That is where our support level is. So if it should break it, or the market might still want to play around, we don't know. We just have to wait and see what's going on. But first, let's profit from this move first. So let's go over to the, you can see everything is pointing now. A double top, break of it, retest, a double top and retest, Fibonacci level 0.5. So that's just it. So let's go to the 4 hours time frame and see how we can enter the market. So on the 4 hours time frame, what is actually, I was on this trade, guys. I was on this trade with, I thought the market wanted to form an head and shoulder pattern, because this is a right shoulder, head, and a left shoulder. So I was inside this trade right about here. So the market came to the neckline, it broke the neckline and went up. The thing about it is that I didn't follow my rules. I was supposed to wait for the neckline to break before I enter the trade, but it is one of those things, guys. I can't. I know I messed up. I messed up. So I can't. I don't want to. I don't want to criticize myself for it. So what I just have to do is to learn from my mistake and do better next time. So this is a similar scenario here. The markets came. So the markets form a higher high here. But if the market should come to this, before we'll be placing any trade on this GBP USD, the market have to break through this trend line, then through this level here. If the market should break through it, if I should see a daily daily bearish candle break through this level here, then we'll be selling, guys. Or the market from, I don't like guessing, but from what this is showing to me now, the markets might just want to break this counter trend line from here to form a base, then give us our left shoulder, and that will be head and shoulder pattern, which I really love. But we don't have to, we don't pretend, we just do what the market says. So what we just have to do is to wait for the break of this counter trend line, then break of this base level here, this neckline that took my money the other time. So this is me learning from it. So I just have to wait for it to break. Then we'll be placing our trade, guys. Let's see the potential opportunities that we have. So if we should enter here, so we have about at least we'll be profiting about 1 point. The minimum, if you should have a higher stop loss, will at least will be profiting about 1.5 risk to reward. If you should use 2%, you are making about 3%, guys. Still okay if you ask me. 3% on the guaranteed trade. I know that nothing is guaranteed, but this trade, trust me, guys. So that's it on trade trends episode 2. Thank you for watching this video, and make sure you subscribe, like, and comment on this video so people so a lot of people can also get to see this, and that way you are helping my channel to grow, which will be encouraging me to make up more videos like this. Thank you guys. Don't forget to subscribe to my YouTube channel. Thank you.